Aditya Birla Group presents Budget 2015, the Make in India Budget. Co-presented by SBI. What the World Wants.
Welcome back to What the World Wants, the show where we get to prominent global opinion on India. My guest now is Brian Jacobson, the Chief Portfolio Strategist at Wells Fargo Funds Management, LLC. How important is this budget? Will your investments be, or will your investors look very keenly at this budget as something that can deliver something seminal?
Yes, well, the budget is always a very interesting thing to watch because it really spells out some of the priorities of the government over the near term. It's probably not as significant as it has been in the past because what we're really looking for is more legislative reforms and the such, which aren't necessarily reflected in the budget. But the budget is certainly something that we do pay very close attention to because it shows what the government's priorities are, especially over the near term, which is always important for investors.
Well, lately, the polemics surrounding the budget are centering around the fiscal deficit itself. The given timetable for the government is to stick to 4.1% in the current year and get to 3.6% of the GDP in terms of fiscal deficit for the next year. Is that a very important target for you? Would you be deeply disappointed if the government didn't adhere to 3.6% next year?
Well, I personally would not be all that upset if they didn't adhere to the 3.6% target. I know that the fiscal rectitude is certainly an important thing over the longer term, but it really depends upon what are they spending the money on. It's okay to run a deficit, provided that it's something that's going to pay off over the longer term. What's really a big problem is when obviously you have too big of a deficit relative to the overall economy, and when the deficit is being driven by a lot of social spending that doesn't really seem to have a big payoff in the future. So as long as there shows a real focus on trying to make longer-term investments, missing that target a little bit, I don't think is going to really be all that disappointing.
Okay, let me give you a blank check kind of question. What would qualify as a good budget for you?
Well, I think the ideal budget would be one in which they hit the deficit target of around 3.6% and where it shows a real emphasis on trying to improve the infrastructure of India, one in which it not only improves the infrastructure, but also brings a lot of the various factions and coalitions in the government together. So if we can get a lot of support behind the budget without a lot of hand-wringing and perhaps politicking, I think that's really what I'd be looking for.
All right. Let me get to the global scenario in which India finds itself. Last year, India got a decent $16 billion in terms of investments. Not the highest that we have got, but decent. Do you think India will be able to repeat that kind of, will see that kind of fund flows this year as well?
I'm anticipating that we're probably going to see a repeat of those types of flows because India is becoming a more popular destination for international investors and for businesses to invest in as well. I think that under the Modi government with the BJP, one of the things that they really wanted to do was put out effectively a big banner saying we are open for business, one in which that they want to have more business-friendly policies towards foreign investors, and that could bring a lot of foreign investment into India. So I am anticipating that trend will continue.
Well, you've been a veteran watcher of Indian companies and Indian markets. How did the third quarter earnings look to you? They disappointed several people in the street. In spite of it, you're still interested?
Yes, despite the disappointment, it wasn't a huge miss across the board. So yeah, I think that you really do look at it sort of quarter by quarter, but over the longer term, if we're looking out over more like 18 months to perhaps 3 years, which is what I typically do when I think about it more thematically, I don't really see a lot of overwhelming weakness in the earnings numbers. So I'm really not that disappointed. It was a short-term disappointment, but it wasn't enough, I think, to really change the underlying thesis for investing in Indian companies.
How would India compare with rival emerging markets? Indeed, with rival investment destinations today, where would it be in your pecking order?
When it comes to the emerging markets, it is such a broad umbrella of countries within there. You have some emerging markets that might be more submerging markets. I think that one of the big unknowns is what's going to happen throughout most of South America, which is one of the reasons why I've been suggesting that people should perhaps underweight that and overweight emerging Asia and emerging Europe. Within the pecking order of my favorite long-term investments, I would say that India is probably near the top. It's not at the top right now, only because I think that in emerging Europe, there are a lot of really good bargains to be had over there. So I think that India last year was my #1 pick. This year, it is in my top 5, but perhaps not the #1, but only because I think things have gotten a lot cheaper in emerging Europe.
All right. Okay, Brian, what kind of sectors interest you in India?
Right now, I'm really interested in the infrastructure play in India because clearly there are a lot of developments that need to take place. I think that you have such a wide amount of inequality across the country that we really need to integrate the economy. And one of the ways in which you can integrate the economy is through various pieces of infrastructure, whether it's through better sewage systems, better roadways, better telecommunications. So I think that my favorite right now is looking more at infrastructure broadly speaking, but that can be in a number of different industries. That could be in the utility sector. That could be in the telecom sector. It could also be in the industrial sector. And so outside of the infrastructure play, I do like the idea of investing more in the information technology space. I think that Indian companies historically have proven themselves to be very good global competitors in the information technology space, and I really don't see them losing much ground to a lot of their non-Indian competitors.
Well, the other theme that, of course, investors watch out in India is what the central bank is doing and where the interest rate cycle is headed. What's your own guess about the interest rate cycle? Are you expecting a series of rate cuts?
I am expecting a series of rate cuts. Now, whether or not those rate cuts actually materialize, I don't think that it necessarily matters for longer-term investors because I don't think interest rates are necessarily too high that it's actually stifling growth. But the thing is, the central bank in India actually does have some wiggle room or some flexibility to lower rates because inflationary pressures have abated, and I think that recently they have begun to cut rates a little bit, signaling that they intend to try to stoke growth. And that's going to be a very important thing, is that they're in a very, I think, good position where they can cut rates because there isn't that inflationary pressure, and the cutting of rates can actually help stimulate some growth. Now, when it comes to actually comparing the rates in India versus, say, in the United States, this is something that's very important, where when the United States Central Bank begins to actually normalize policy or begin raising rates, there are concerns about whether or not that's going to adversely affect emerging markets, especially India. So that's where I think that right now the central bank in India is in a very good position to try to manage that transition.
I will come to you with some more global questions, but just to pursue this interest rate cycle and the themes it generates a bit more, would you invest in financials in a big way? Would you invest in government-owned banks, or would you prefer private banks?
My preference is to actually, when looking at the development of the financial sector in India, I think that it does present some very good opportunities. Rates, when they're being lowered, the purpose of it is not to stifle growth it's not because they're actually trying to harm the financial sector. I think that lower rates are going to be beneficial to the financial sector. The big question is which financial institutions will benefit most from this. I think think that there's a broad canopy of businesses, of banks that you can look at. However, it might actually be better to be looking more at the consumer side as opposed to looking at financials. Yes, the banks can probably profit from this and do well, but maybe more of the consumer-oriented businesses are going to benefit, because it's the consumers ultimately that are going to have lower debt servicing burdens. So that's probably the way that I would play it more now.
Thanks a lot for joining me, Brian Jacobson. That's it on this edition of What the World Wants from India.
Aditya Birla Group presents Budget 2015, the Make in India Budget. Co-presented by SBI. What the world wants.